Ladies and gentlemen, welcome to this new episode in the series on IT service management and the ITIL infrastructure library. Today, I have the great pleasure to have Dr. Thomas Mangel here as an interview guest. Thomas has studied mathematics at Bonn University and has been the Chief Executive Officer of Postbank Systems, the IT service provider of Postbank, and also has been responsible for the transformation project, the digital transformation project as Chief Digital Officer of Postbank. In addition, Thomas has been in the Supervisory Committee of BCB AG, and he has been responsible during the takeover of Postbank by Deutsche Bank for the transformation project, and so has been responsible for most of the software of Deutsche Bank as well. So, it's great to have you here, Thomas.
It's my pleasure sharing some of the insights I got during the time I did all this that you mentioned. Yeah. I'm very glad to be here.
So, I mean, it's very impressive. For me, it sounds like these are 3 or 4 jobs at the same time. I mean, was that really all in parallel?
Yeah, it was. In fact, it was all in parallel. And despite that, I had negotiations with the HR committee where I got a couple of wages, but no, I just got paid once. It was somewhat jobs in parallel, but this was more like a natural development. If you look, the role of the CIO, which was the role that I had as the chief of the IT, in the past was more like the translator between business and IT, and this was one of the roles that I had from the IT side. And in many of the companies, the bigger companies, there was a time when they all announced a CDO, Chief Digital Officer, to do this kind of digital transformation. And in the end, it ended up with more than one people trying to translate between business and IT. Okay. And it was more like a natural discussion, natural development. Where should this guy come from, or this person? Is it an IT person? Is it a business person? And more you learn that you need someone who understands both sides. And therefore, my boss in those times, the boss of the bank, decided I will put it in one person together, which was me. So I did the CDO and the CIO job in parallel, which really was a good move, especially in those ages when you talked about agile development, bringing teams together and sitting on both sides of the responsibility. You could bring your people from the right side and left side together, forming new teams. So this one was more like a helpful bringing together the topics. And the third job with the BCB, it was more coming from the fact that we were the service provider as IT for the BCB, because most of their business is IT related.
Okay, but I think you have to explain a little more, because I think our viewers know what a bank is and know what an IT service provider is, but BCB, what is that?
Yeah, the BCB, then the name stands for Betriebs-Center for Banken. In Germany, it is more like a process outsourcing or a process service provider. So you see a lot of IT service providers and all this stuff, but in this case, it's really a whole process provider. They do the whole payment transaction, not only for those days it was started in Postbank, but they were an offering to the market. So they did the payment transactions for Postbank, for Deutsche Bank, for Dresdner Bank, as long as they were not incorporated into Commerzbank. They did it for the HVB, they did it for the HSH Nordbank. So this was one of the biggest payments transaction service providers. So they do the full service payments transaction processing for banks.
So it's really a business process outsourcing and not only IT, IT outsourcing.
It comes from the process, and especially in this area, when you look at the volumes and all this stuff, it is 90%, 95% is IT-based business, but behind this is a whole process that you hand over to this company, related all to payment transactions.
Okay. But I can understand that, I mean, being the CIO of the IT service provider, the CEO of the IT service provider and CIO, so to speak, of the bank, I mean, this is, of course, a good solution, because you have only one person doing the whole thing. But, of course, the two companies aren't really separated at that moment, are they?
Yeah, at the very moment, this is the reason why we're talking about my past. Nowadays, I'm a little bit more like, not a little bit, I am retired, because In the past, it was so that this subsidiary was part of the bank itself. So it was core business. There was a subsidiary built for it, but it was more like for other reasons to attract interesting people in the IT market and so on. But it was inherent part of the bank. Nowadays, they sold this company to one of the biggest service providers, like it's TCS. So they decided to put it in a bigger circumstance and put it into the framework of a bigger service provider, which then led to my, let's say, pleasure time that I now have playing tennis with other people and all this stuff. But it was more like the change of being an internal IT provider, handing it over to an overall global service company.
Okay. So, I mean, if we look at the business processes, because this is one of my favorite topics, one of the, I think, the most important business processes for a retail bank is transferring money from one account to another, I'm afraid. And can you explain a little on that? How does this process work in terms of steps and so on?
I think this is a very good example for an automation, process automation over time. So a process is never, an automation is never start and end in the sense of you decide what to do and you do put it into implementation and it's done. It's development over a long time frame until you start with something that is not very much automated till coming to very automated situation. So to explain a little bit more, I have to go a little bit back to the, let's say, to the 90s. When you in the 90s would make a money transfer from A to B, it meant that you had to write a format saying, okay, here my bank, please send money from my account to the account to Andreas Hense, which might be in a totally different bank. In those days, it was more like a proprietary format of information that you give to your bank, and only this bank would understand how it works. So this is what, and we can talk a little bit more about it, where very, very much of standardization has happened and where very, very much of automatization has happened. So we came over the so-called DTA, the German payment transaction standard, and now it's SEPA. We're now talking about SEPA, which is not only a regulated sense of that you have to make things in Europe in a special way. It is more like a whole process framework, how payments are processed between banks, not only in Germany. Nowadays, all over Europe, there's a standardization, not only in the sense of formats, but also in the sense of processes. And if you look at the process, it looks very easy to say, I take the money from one account and put it to the other account. But the crucial part is that these accounts are not in the same banks, and that the volumes, in the sense not of amount of money, but the volume of how many transactions happen a day in this area.
What volumes are we talking here? I mean, can you give us an estimate?
I said it's not the amounts of money, it's the sheer amount of transactions. When you look at a bank like Postbank, you had on peak days 25 million transactions per day. Transactions in the sense of money sent from A to B.
Yes.
If you look to the whole market, you're talking about billions of transactions.
Yes.
This is not only what we send, I send money to you. You have to imagine all the insurance companies, all the telcos, in the end of the month or in the end of the year, when they send the bills out. In earlier days, they send a paper. Here, please fill in your account number, do your underwriting and send it to your bank. Nowadays, they do what we call Lastschrift. They withdraw the money. And you get from the telcos, you get millions of transactions per month, and they come all in the month end. So you have these huge peak days. And if you're thinking about, let's say, have 90% fault tolerant, that doesn't work. You need 99.99 or something like this, because the sheer amount of transactions that comes into these systems, and it's an interbank system. It's not only done in one bank. The major challenge is that this is an interbank process that goes over the ECB with many, many banks.
And you said that in the single European payment area, there's also a new process behind that. So it's different from the national process. Not only very long account numbers, but also a different process.
Yeah.
And
it was very much developed by there were two companies, two countries in Europe that were front running. It was Germany, it was France.
Yes.
So it is a little bit oriented to the process that we already had there. It goes like you collect all the transactions in the banks, and then you put them together in bundles. So if 1 million customers from the bank A would like to send money to bank B, you don't send 1 million times money. You send money one time, and you send an additional information. This is for all these persons, for all these accounts. And then the bank does a process looking really, does this account exist? And so it says, okay, 1 million transactions came in. I can perform 990,000 of them. 10,000 didn't work. I give them back. So you also have this. One of the challenges is that this is not a straightforward process where everything can be booked as you would like to. For instance, if you withdraw money from an account and you see, oh, this customer has no money, you cannot take the money. So there's something like when the telco comes and says, okay, I want to take your bill, and there's no money on this account, this is refused. So you have to give to the bank that sent out the request, you have to tell them, no, it didn't come, you can get the money. In this case, they even take something like a fee and all this stuff. So the whole model is something like not only knowing this is for this account, this is from this person, this is the amount of money. You have to really have a complicated and resilient process how all these money transfers, or if they work or don't work, how they all work together, that in the end of the day, everything must be close to zero. So at the end of the day, it's not possible that money is hanging around here and money is hanging around here. At the end, the EZB, which is the European Central Bank, is the one unit where everything comes together in the sense of you have to send them all the money that is somewhat in these accounts that are for interworking. So they hold the interworking account between the banks, and they have all been brought down to zero. Back to everything's fine now.
And so how much manual work is there still involved? Because I suppose many of these transactions are completely automated, but how much manual work is there?
It starts, and it depends a little bit from how the transactions come in. There's still a portion of transactions that come in via paper, but this is going down. So still there are a lot of people writing these formats for send my money to ABC, but this is just in the input channel. So directly, if it comes, you scan it. You have your database that help you make the best recognition that's possible, 99% recognition rate, and these databases now, Professor Hense has already sent money to Thomas Mangel. Let's check whether he has misspelled something. It might be context information. This time he might have not written Mangel, he might Mansel, then we correct the G and all this stuff. So with all these input channel, there's a lot of knowledge behind to really fast transfer to electronic and automated processes. And then everything behind is, at least the challenge is to make it highly automated. As I said, if you run into problems like some banks had it, and you read it in the newspapers, like double bookings. If you have only such a small portion of double bookings, that might be 200,000. We had it in some cases. 200,000 double bookings mean that you don't have 200,000 accounts in your house where you have a fault. You have 200,000 accounts in all other banks where something went wrong. And as it is not a deterministic way of working, as you might send out money and another bank has asked for the money for the telco, it might be already gone. If you send it again or withdraw, then it might already be gone away. So there is no way. So if something like this happens, there are huge task forces that try to fix the whole system again. So this system relies on a very low level of tolerance for faults. So it must be highly automatized. And this means as good as no manual interactions. We in Postbank, for instance, we had 1 million jobs running per month to have the whole automated system running. And the only manual interference was like checkpoints. You work with a banking calendar where you have written, is it a banking day or not? It's all baked into the systems, but these are points where you say, I would like to have some person in the morning check it whether the calendar is right. So there pops up a stop sign. Today no banking. Is this right? And then someone has to say, yeah, it's right. But there's no, in the sense of process parts that are not automated. The whole system runs really automatically, but you have some of these proof points, some of these checkpoints where you would like to have a double checking. And Most of these double checking is done by manual, by stop sign, and you would look at it and say, okay, next step of the automatized process can go on. This is what you do manually. All other things are done really automatized.
Oh, okay. I mean, the SEPA is taken for granted by many people, I think, now, and nobody thinks about it anymore. But I recently had to transfer money to Australia to someone who didn't accept a credit card, for example, and this was a nightmare. You had to find out the address of the bank, and it was really complex. And what will be the future? I mean, what do you think? Where will it go? Will there be some kind of worldwide SEPA one day, or will there be credit cards, PayPals, and all these other systems? I mean, how will that evolve? What is your opinion on that?
Yeah, I think the answer is twofold. The one thing is credit cards and PayPals and all this stuff. Yeah, they will evolve, but they are not the solution. If you make a PayPal payment, it goes then to the bank to transfer the money. In reality, PayPal has a PayPal account, but they don't transfer money. They cannot. They have no ATMs or something. Like if I send you money via PayPal, in behind there's a SEPA transaction between our bank accounts. So this is not the solution for the problem. So I think there will be this kind of standardization what really works. I think like in SEPA, you have these things in SWIFT, but these are more from a very more business-oriented point, high volume payments and all this stuff. They are not ready for these huge amounts of transactions. And what you have to see that this huge amount of transactions is only possible by building these bulk transactions where you say, I send once the money and the information separately and you put it back in the accounts. With the new SEPA direct payment where you have instant payments, this is a totally new approach which is just in the mind of the people, it's a no-brainer, almost no change. The whole model is changed because now you have to send every single transaction as a single transaction, which kills the system in the sense of volume between the interbanking channels. So I think there will be coming things more and more standardized also over the world, but this needs its time. It was long enough. I was part of the SEPA specification teams between the banks. If you see how much struggle it was to talk about single fields, because it's in all these informations not only incorporated that it's this account. There's also something like, let's take this field and this bit for the way we take the fee if the money cannot be withdrawn from the telco or something. So this is very complicated. It's more in the SEPA standard, it's much more information than you would think. There's a lot of information about whether the transaction went right, how to deal with fees and all this stuff. Yeah, it's all in this. So the standardization is more complicated than you think. But as it was in Europe, was the same. If you think 20 years ago and you would like to send money to Italy, it was the same. You had to find out what is the address of the bank, who is the right person in the bank. In some areas, you had to send it to the special person. This is now gone away, and I think I think something like PayPal and so on, they will play a role because they do these worldwide transactions and they need the backbone to send the money in reality. So they will, I think they will foster the standardization and they will help us in the sense of that it makes it easier for the customer itself. It's totally easy to say, I know your email address in China, I can send you money. And I think those big ones that really provide these services, they need the backbone, then they will drive the standardization. And if the bank wouldn't do it, then they are mighty enough to think about other mechanisms like being the correspondent bank between countries and covering this. So the banks have to do something there, otherwise those new ones will develop something that substitutes them.
Okay. But I think these instant payments, I think there is some utility. For example, if you buy a used car, it's important to have that. And what do you think? I mean, if everyone would be doing these instant payments right now, would that lead to an explosion of the actual system? Wouldn't it be capable of handling that? Because you have to group these things, or?
Yeah, I think if you would really fast change from the existing system with a asynchronous transfer of the money, it goes via day end, it goes to the EZB and all this stuff, the money. If you would go from one day to the other, would change to instant payment, the whole system would break down. It is not capable of doing it the way that you do it in single transactions between the banks, what you do now with millions of transactions bundled and put together. So this easy sounding simple principle of, yeah, let's book it directly to the other bank,
Yes.
would kill the system in the very moment. It might change over time, and the more you get to providers that do it in-house, like what we had in the BCB, then you change the whole model in this sense. There's one entity that holds all these processes. So the money don't leave the house. So if someone from Postbank sends money to Deutsche Bank and someone from Dresdner Bank sends money to HVB and so on, it sounds like I send it from bank A to bank B, but it's all done within the payments transaction area. The only thing is then you have to send it to their core banking system. That is okay. But the whole turnaround is done very centric. Okay. This is one reason why many of the banks start to build up something again that was called in the 90s garage clearing. Yes. They all had bilateral systems for clearing between each other. This way they couldn't work with their proprietary formats, and they could do it very quickly direct. And now there's something that's redeveloping, because this helps in this instant payment area to get those banks, all the banks, nearer together. They start to do this garage clearing, which the EZB doesn't like very much, because they get a fee for every single amount of money going over their table.
Okay, but I mean, if you have these n nodes and you have one bilateral relation between each of them, you have this quadratic growth, as you well know, and the SEPA is one standard and one, it's much simpler from a certain perspective.
But on the other side, there are not too many big players in this market. When you look into Germany, and still so that money that goes outside one country is not so much in the amount. It's still more. As everyone thought, with all these EU regulations, SEPA, you would see global players, at least in the European market. Name me one European bank that is broadly active in the customer business. And don't talk about like ING or someone. They all have country business. So there's an ING in Germany, there's an ING in Netherlands, an ING here. So what they all expected, that we see European banks in the consumer banking area. No, it still is not there. So most of the transactions are in-country transactions. It would change a lot if there would be any business that would foster the inter-European transactions. But as it's not this way, garage clearing between the big ones, for instance in Germany, still makes sense.
Okay. So maybe let's leave a little the banking sector and talk about IT management. Yeah. So I know that Postbank Systems and also its predecessor has looked at the IT infrastructure library already in the last century, I think in the 90s or something like that, and was very early to adopt these things. And I still remember when these first ITIL brochures came out. You could put them in your pocket, and they were very small, and now you have these 5 or 6 volumes, and it really takes up a lot of space, and so there has been a big development there. Do you know when Postbank System, officially, let's say, adopted ITIL?
Yeah, I think I can roughly say it. It was around 2006, 2007, I think. Postbank had a big implementation of SAP. We changed most of the core banking systems to SAP. The core banking, the payments systems, the customer account systems, and all this stuff. And we ended up with challenges around how to structure our production processes. SAP has its own structure of process management for production. Is a lot of now with cloud-based, but we had a lot of virtualized systems and so on. So there were challenges about what is the right model for our IT company or for the organization of the company. And coming from the past, it was more like a skill-based organization that you saw till the 90s. In every IT, there were some stars that knew everything, and they liked catastrophes because then they got heroes. So you have to have these organizations built around skills of people. And what you needed, especially in such an environment like banking, which is highly regulated, you have to do separation of concerns. You have to reduce manual interference with the system. So this was the time when we thought about process-oriented organization. and where we took things from the ITIL library, but as we were very fond of things, we also we injected things also there. So this is because this is I think the strongest of ITIL, but on the other hand also kind of weakness. It was not done by a thinkage approach. It was more like a practical approach. So you could see what are best practices, what do other IT providers. You can adopt them. If you were quite quickly, you made the same mistakes that they did. Yes. So it was common learning what is good, what is not good, but it was more like a way of orientation. What is the good way to change your organization to a more process-oriented organization?
Okay, because ITIL, it's not really organization focused because it has these roles and they are independent of any organization. So it's supposed to fit any organization.
Yeah, but when you see the organization, at least in those days, we're not talking about the agile time or something. In those days, the organization was really very much oriented in roles. The IT was not so much a professionalized business in the sense of your job description is this and this, and this developed over time. If you looked in job announcements and all stuff, testing, engineering, yes, architects, the days before they were all skill-based. They knew about this system, this system. In those times, they developed like job models. What is an architect? What does an architect do? What is a software architect, an enterprise architect? What is a test engineer? What does a test engineer do? What is a software developer? What is the guy that sits there and does the maintenance of the servers? Before those, you had just there are the Unix guys, there are the COBOL guys, there are the DB2 guys.
So it was
product-oriented or skill-oriented, and there you at least started to implement an organization around process and roles.
Okay.
So and on the other side, it developed roles in the sense of, you could say in the market, I'm working as a software engineer, and you can change companies. Before you had to say, I can SAP, I'm capable of SAP, I'm capable of this. You got something like really job description,
you had no words to describe what you were doing.
And got something like an interaction or interchangeability for the people. So it was more open market in the sense of coming from a bank. You can go to another manufacturer, but saying, but I'm a test engineer. I know how to build up theoretical test cases.
Mm-hmm. Okay. You talked about Agile, and before this idea of Agile, I think back in the early 2000s or something like that, there was this strong separation between design, development, and operation. Yeah. And there was this law that you should never have any developer touch the operative system, yeah, and really there was this handover which always was a problem, and that was the way things were at the time. And I think one of the reasons why ITIL 4, the latest ITIL version, came into play was to allow for a different view of things. So what has been the development in Postbank or Postbank Systems regarding this aspect?
Postbank also, it was the same in Deutsche Bank. These separation of concerns, having developers, having clear level 1, level 2, level 3 support and all this stuff, having product people that are capable of going to the systems and all this stuff. This was really much then driven by regulations. And also not only the regulated businesses, but also many other businesses in the sense of having a fear of fraud, cyber attacks, and thinking if one person is too mighty and has too much in his role, too much rights and all this stuff. So this was driving the way that work was designed and cut into pieces. Mm-hmm. Before Agile could really come to place, and I'm not talking about Agile in the sense of business and IT sitting more closely together, discussing, not writing functional specs, other specs, and then the one does it and the other one checks what is done. Mm-hmm. This is the kind of Agile cooperation between business and IT. But the more Agile part of really developing things faster, deploying faster, this was only made possible by automatization. Mm-hmm. If you wouldn't implement a foundation like Cloud Foundry, and if you wouldn't implement things like where you could put micro container-based and all this stuff, if you wouldn't have a fully automated deploy scheme where the deployment of software is checked automatically, where every line of code is checked by a fraud detection system, where the deployment is done automatically with checking that the check-in in your repository of the software has the identical as hashtag like this and all this stuff. So the whole deployment and the whole transfer of software, at least in our house, was in the end fully automatized. And there the fear that you had, that there's a developer with rights in the production and he can change and he can manipulate and all this stuff, this was gone in this sense because, yeah, the software was written by him and was deployed in the sense he pressed the button, please deploy. Yes. But the deployment is a deployment software life cycle chain work that really does this automatically. He cannot has no root rights in production to change things there. He has the right to press the button to say, my software is ready for deployment, deploy it. Mm-hmm. And there's still the checks that another one in the Agile team has to say it's fine and all this stuff, but the major foundation that you can change these things was automatization. It was that we got away from all these manual maintenance and all this stuff.
Okay, so now we are talking about automation really in the IT service provision and not in the bank and in the core business, of course. And that's also an important point. I mean, there is this role of the change manager, the change advisory board. And where do these people come in such an automated sequence? I mean, are they there just, looking at things and just say yes, yes, yes? Or what's their role now?
No, their role is more like... they have to make sure that this is a sound model in the sense of the change management board. It has not only those development items where say, okay, there's a functional development from the banking side, and okay, yeah, you have your writing under it. Most of this is, for instance, the updates that come in from the vendors and all this stuff. So the change management board sees the whole flow of changes going into production. And they really have to evaluate whether it's too much that coming as a change in one time or in flow. The change management board is really, they have to make sure that this is a sound amount of changes and that every change has at least the necessary quality checks to let it come through these gates that they're sitting on. Mm-hmm. They don't do anything like pressing buttons or doing something in deployment, but they are the ones. It's like when you may do a promotion, you have to go somewhere and make clear that you have the right to do so. The same is there. In difficult cases, those guys that had software to deploy, they had to go to the change management board and convince them that it's the right time now. Not in the sense of whether it's a mature software or something, but the change management board has to control the flow of changes to production. It has to make sure that these make sense at the time and it is not too much at one time, or that we get those mandatory updates coming from the vendors, that they come timely into the system. And this is the change management board. And it's a very high responsibility because from there, if they do good business, the amount of errors in production really goes down. You can see a good change management board. My experience really was they drove down the amount of errors in production.
Okay. I mean, yeah, that's their role after all. I think in the retail business especially, I mean, you have something like a frozen zone where you just before Christmas, for example, everyone wants to go shopping, and if the payment terminals didn't work, then it would be catastrophe for the merchants and so on. Is this still there, or is this now different because of this agile development and always new things coming in, like trickling in constantly, or is there still something like a frozen zone?
There are still frozen zones because if something goes wrong, most of the time it was coming from a change. Mm-hmm. So there are always problems that come from something like a bug or something that was baked into the system and pops up somehow. But in the end, most of the time it was a change. So you have these frozen zones. In a mature model, you can have something like an A/B environment when you can test smaller things, when you can say, okay, we do something in the online banking, or there are some kind of areas like advertising spaces or something like this that you change also in the frozen zone. Mm-hmm. But really changing your core business in such a time frame you wouldn't do. Mm-hmm. Still not.
Yeah, another area that interests me is project management, IT project management. And besides an IT service management framework, usually you have some kind of project management framework like a V-model or Prince2 or something like that. What is your approach on that? What kind of framework do you use?
We used frameworks for single projects, but not the multi-project management. We had huge programs where you needed something like this, but normally you had single project management for the development paths, and then you had a release management and quality management above it. So not so much like a multi-project management with packages going in hand or something like this. We had 2 releases a year, major releases, and every month release, also in the classic times. And every part of it in one area was done via a project approach, but it was then bundled in the quality management and in the release management to the go lives. So, but this changed a lot and will change a lot within the agile world when you won't see projects like this anymore. In the agile development, you don't have this classical project manager. It was more and more to a product manager who's responsible for his product, his services, and he decides with whom to interact and with whom to make something like a contract about transformation of functionality on this stuff and when to go live. And we've seen it already there were some organizations also in the banking market like the Commerzbank who tried really to change the whole organization to an agile model. They really put all business people, all responsible business people for products, all IT people to one campus, and really changed the organization to an overall organization, IT with business and all together in tribes like the Spotify model.
Yes.
And one thing they learned from it is they don't need project managers. They only need product managers. And this will be, you have to learn from it, what are the pitfalls of it, but this really leads to a project-free approach, which is very, really interesting in the sense of we come from a long development of project management. It's a really mature model and helps a lot. And this is one of the major cornerstones that will go away with this change.
Oh, that's very interesting. I didn't know that. I mean, projects are also a way of a means of distributing budget, of course. I mean, you say you want this project, you have this time and this budget. So how is budget then distributed in a world without projects?
It's distributed by the different product areas.
Yes.
A product area has its budget. A tribe has its budget.
An annual budget, something like that?
Annual budget, or they do something like a quarterly roundup saying who is more in focus, who gets more of the share what you see is their budget is not only for developing new things. In this agile model, your teams are responsible for the production for level 2, level 3. So you have in this kind, you don't separate your development budget from your maintenance budget. This is one budget for this area. So on the more efficiently you work on the maintenance and on the production side, the more money you free up for your new developments, which is also a good incentive for these organizations to develop efficiency. So in the classic model, you had a production budget, maintenance budget, and projects sitting on top of it with their deliberate budgets. So now you have, this is the area of, let's say, credits.
Yes.
And credits has a budget. Business and IT together for running the shop.
Okay.
And if they are good in doing what is day-to-day, they have more money for what they would like to make new.
Okay, but I can see immediately why this is a good idea to put these two things together. But then, I mean, you have to, you have to separate, you have to organize somewhere. So there have to be some kind of places where you cut. And you think that with this new approach, it may be better than the previous one with projects? Or?
Yeah, with organizations, there's no good and bad. What you do, from time to time, you change your organization. Because if it goes into one direction, it might be the right in this time. If it stays in this direction, it will develop in the wrong direction, because the organization is always like a pendulum, going there and there. In the discussion now, it's in this agile approach, is more giving more responsibility to the teams. They are making more decentral. If you're a little bit picky on this, you have a good central architecture team controlling what they're doing, that they don't do too much nonsense. But what you came from with these enterprise architects that has prescriptions on what they all may do and what they not may do, and then you go away from it. You tell these teams, these are frameworks, use Angular, it's fine. Perhaps you give some standards, you give them, use this foundation, but then you don't dig too much in how they develop the software and so on. And I think in a couple of years, this might change to a different approach that you do what we saw in the 90s, where everything was generated on programs or something like this. But at the very moment, the change from this very much process-orientated, very structured, very controlled organization to this agile organization comes with giving more freeness on these things. I think this will change someday. We will see how this matures, but as I've seen perhaps if you've seen how these guys that develop the software for Tesla, how they do it, they have exactly this approach, but they have these pairing in the implementation program. There are always two people sitting there. I've been there in how they do it. Yes. There are always two people sitting there. It's not pair programming. Yes. It's not in the sense of they control each other, they help each other, but on the other side, there is always a kind of control if two guys are doing the same thing or two people doing the same. So I think that this is, as I said, improvement has no beginning and has no end. Improvement will go on, so it will change.
Yeah, the continual improvement.
And it won't go always in the same direction. The pendulum will go into another direction. But with this kind of change that we, at least as we saw there in these areas where they really try to go to the Spotify, we always call it Spotify model. They let loose of many of these restrictions and giving the teams the freeness, but also the budget and also the responsibility. And if it goes wrong, they are there to fix it. So if, like they were used to, hey, if tonight something goes on with the system, we've got the production guys. They should first try to fix it. No, there's only one team responsible for all. And if your system has a problem deeply in the night, you're the one to wake up and go there and try to fix it, because there are no production guys that you can put the blame on, say you have to work in the night.
Okay, yeah, great. Yeah, I mean, it's really great. I mean, thanks for this insight from the top level view. I mean, I always have seen so far more the frog perspective of things, and it's really interesting to see it from a completely different perspective, and also these new developments. And I think it's very helpful for everyone who wants to study this new ITIL framework, also to see these developments there, and that is really coherent with what has been going on in the ITIL framework from version 3 to version 4. Thanks very much, Thomas.
It was a pleasure.
Ladies and gentlemen, this is the end of the interview. If you watched until here, thank you for watching, and see you in the next time.